Hi everybody, welcome to another update on the stock screener. Today we're going to look at Fortuna Silver, which is actually called Fortuna Gold because someone asked for it. And I always wanted to take a deeper look into this company and see if it has any potential. So let's look at some of the data. This company is difficult because we have 5 mines and we need to take them all into account. So let's take a look at all the mines. First, we have the Lindero mine, which is pretty high cost, 1,500 AISC, mine life 12 years, production 100,000 gold. Okay, the next mine is Yaramoko, even higher costs, 1,600 gold, only 3 years mine life. That's important. Could be that this one gets depleted in 3 years and 100,000 production. Then we have the silver mines, San Jose. Converted in gold, it's low cost, 1,200, but only 2.5 years mine life. That's a concern. This is going to get depleted very fast, and 100,000 gold equivalents. Then we have Kailoma, which is also silver, zinc, lead, high cost mine, produces a bit less, but it has 6 years mine life. Then we have Seguela, which is a new mine that has been put in production, so good, 120,000 production and 8.6 mine life. So these two are of concern, and this one is actually also pretty low mine life, 6 years, but acceptable. So I have converted them all into the general all-in sustaining cost, which is around 1,400. This is the production, and it's going to drop off from around 500 to 300. So that's my main concern. Production could go down. So this is the chart for today. At 1900 gold, it's a bit overvalued, but acceptable. But in about 3 years, production is going to drop to this. So at 1900, then the value will drop in half because they will produce less gold in 3 years from now. So that's the main concern. Production is not going to rise, but drop unless they find some good projects to build. But that will, of course, need capex. So it's double-edged sword. Either your production goes down, you have low capex, or the capex will rise, but you can maintain your production. So it all depends on management. Can they find a good mine to increase mine life? So this is the NPV chart. Capex around 22 million. They do have some debt, 40 million interest payments. Production is going to drop off to 300,000, and then after 6 years drop even more to 200,000 unless they find new mines. Enterprise value is pretty high at 1.3 billion. So the market cap is 800 million, but they have quite a lot of debt. 686 million in debt. So the enterprise value is elevated. That's important to know. The money that's coming in will need to be going to the debt holders first because they need to be paid as well. And then the money will come to the shareholders. So take that into account, they have a lot of debt to pay. That's visible here. The money starts coming in at an NPV 10. But it will never reach your enterprise value. You see that? It will never reach your enterprise value, which means that this company is overvalued. I expect this company to underperform, and the share price should come down by 20 to 30% in the coming years because it's overvalued. Of course, if gold goes up, then maybe it can stay flat. If we reach 2,200, 300, then it could stay flat, share price. But if gold stays at 2,000, then I see downsides due to production dropping off. Imprint this into your head. This is not going to go to the enterprise value. Now look at Soma Gold. This is going to rise double, triple easily. So in only 3 years, you get to the enterprise value. With Fortuna Silver, you get a completely different chart. You will never hit your enterprise value. So very easy for me. Soma Gold is still better than Fortuna Silver. And I'll see you in the next video.